Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with this Wednesday metals market update for October 4th, 2017. It's 4:45 p.m. They just wiped the boards, but these are where the settlement prices are in the metals. And yeah, you had a little bit of a bounce in the gold market, another day of gains in the stocks. The dollar index down a little as foreign currencies up. We're getting ready for the jobs data report on Friday, but please remember, these jobs data reports could be very much impacted by Hurricane Harvey and Irma. It gives cover if the report's not good. It gives cover if the report is better than thought. They'll say it's because people are going back to work because of them. So you have a mixture going on there. When I look at the gold market, as I said to you the other day, the market is now down to the 18-week moving average of closes. It's settled in right there, and volatility is for the week gotten pretty narrow. If you take a look, you got roughly a $12 range. It's quite small. When we look at a daily area chart of closes, all you've done is drop about $80 in this market. You're getting a little bit of a bounce finally, but that's it, a bounce, no change of trend. And you see that pretty clear on the chart, just nothing there. Now, an argument could be made by some, if prices can get over 1293.20, that you've broken, again, the pattern of lower highs and lower lows, which is the definition of a downtrend. And because that was the last rally high, that red arrow, okay, I can live with that. The market is fighting a battle at the 100-day average of closes. I pointed that out to you when we first hit it 3 days ago, and we're still basically in that range. The 18-day average is the resistance above the market. The Bollinger Bands have sloped down and widened out. They're really not offering much in the way of a support number to the market, but here's the culprit. When you have an embedded reading until that red line pops back over 20, the market on rallies gets short-lived often because it's saying that momentum is leading price to the downside. It converts from being oversold to locking in a bear trend. And you're seeing that the rally attempts are short-lived at this point. The gold ETF doesn't have a trend in terms of the swing line. It's got a higher high pattern and then a lower low, but it has the embedded reading. It too is fighting a battle at the 100-day average, but we're going to call this market under the influence of the slow stochastic, and until the red line pops over 20, I still say that the bears are controlling the market. I mentioned to you the other day that often, not always, often, the miners seem to lead the futures price, the raw price, and they turned themselves up. Now, this is yesterday. Today they came up, and look where the market seems to be going. Remember what I said, when you lose an embedded reading, often the market makes a run towards the closest of, be it the 18 or the 100-day average. It depends if which one's above you. In this case, it's the 18. The battleground was just like we saw in the other parts of the gold market, the 100-day average. I'm going to call this market out of its trend. So it's out of a downtrend. I'm not saying it's in an uptrend. I'm saying the neutral zone is 23.65. The gold-silver ratio has gone flat. I mentioned that this week too. You can see how it went from 74.33 to 77.10. Remember what this is? You needed at this point 74.33 ounces of silver in your make-believe shopping cart to get 1 ounce of gold. Now you need 76.8. Well, when the number goes up, that means that gold is stronger than silver. Just a reference point. When I look at the December silver bar chart, you notice that the market had another break. Now look at today's low. It is underneath at 1655.50. We go to yesterday's low, 1657. So two things of importance here. Number one, you have an embedded reading, so the rallies are short-lived. Number two, it's an outside day down. If today's high is taken out, watch out. You could finally be at a point where the market, be it tomorrow or the day after, is saying, no, 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 it's fallen too much and the market's ready to go back to potentially, of course, the first number is the closest one, the 100-day average, maybe the 18. But without that occurring, next target is 1627.5. So what you've got to be careful of is gold and silver are still, in terms of momentum, very bearish. In the copper, battleground has become the 18-day average of closes. You've now hit it 4 days in a row. So this market's taking note of that, trying to figure out what to do. Should it close over that number, it would have, under the current chart pattern, higher lows and higher highs. Take out 292.60 and you end up all of a sudden with lower highs, lower lows, and the 289.50 number comes into play. Because momentum is pointing up, the odds still favor it's going to try the upside, not the down, but it's a difficult call right there. The platinum market is like the gold and the silver. It's got the bearish embedded reading, still coming to the downside. We'll see if it can clear this last low. You've got a ways to go to even get to a lower Bollinger Band. And remember what I told you yesterday. If you take a look here, you were at the point where you might get a bearish crossover where the 18-day gets under the 100. It happened today. So in theory, if you get bearish crossover, you should make new lows for the move. So 909.80 is a likely target for the market. In the palladium market, it's neutral time. You've got higher high, lower low, flat momentum stuck against the 18-day average of closes. Truly not a lot going on there. And the dollar index, well, if you look at the dollar index and I look at the momentum, you got both numbers over 80, both numbers over 80, but not the day before. Tomorrow's the key day. If the market recovers and embeds, it says that we're going even higher in this. Right now, the market's at its most overbought state, vulnerable to more of a correction, even though it's in an uptrend, because most times you don't embed. You get down to oversold like you did here or overbought. It's rare that you embed. You'll see it there. You did it once here, and you had a heck of a move when it did it. See what I'm saying? So I pay attention to that on these indices. With that, I'm Ira Epstein. You have yourself a good day. I'm waiting for the boards to light up again so we start trading for, what would that be? Thursday. You have a good day.